Hi guys, today I am going to review Ramco Systems, one of the IT software company in India. This is a product IT company. So Ramco Systems was established in 1997. It was established as a part of Ramco Systems in 1992 and it became an independent company in 1997. Right now they are headquartered at Chennai. It has 24 global offices, around 1000 plus customers, and there are 1900 employees, and they have users more than 150,000. So they had a revenue of 84.92 million, and they are present in 35 plus countries. So these are some of the examples of their major customers. Most of their revenue actually comes from Asia Pacific region. So these are the main companies in Asia Pacific region. They are also present in US and other Western nations, but majority of their revenue comes from Asia Pacific region. Let's see the milestones about Ramco Systems. Ramco Systems Limited was founded in 1992, Chennai, Tamil Nadu. It was initially part of Ramco Group, but it became independent company in 1997. In 2000, Ramco Systems entered into an alliance with Checkpoint Software Technologies Limited to provide software training and certification related to internet security products and services. 2002, Venkataraja takes over operational control of Ramco Systems. 2003, Ramco Systems wins large order from Tata's Teleservices. Same year, they got ties with eTalk as business partner for India and Southeast Asia. 2005, they unveil a new version of Ramco Decision Works. 2006, they got orders from DLF Universal for order. We don't know what kind of software product is that. 2008, Ramco Systems wins HCM order from Landmark Group. HCM means Human Capital Management Software. And 2010, Ramco System firms upon unveiling software tools for aerospace and defense, and they are one of the major software players in this space. 2010, Ramco Systems and ESIS in partnership providing seamless supply chain integration. So let's see their business subdivisions. So they have been in ERP space or enterprise resource planning software, including enterprise asset management suite for around 3 decades, and most of their revenue, around 40% of revenue, comes from this source. So there is also another software related which is Ramco Logistic, which was part of ERP, but it was turned out as a separate software suite, just like EAM suite. Then there is SCM software, which is Ramco HRP. 37% of revenue is contributed by Ramco HRP. Then the recent one, which was not recent, around 1 decade, they have Ramco Aviation software, and 23% of the revenue comes from this source. Let's see some of the business division. First one is Ramco ERP system, in which the company has 3 decades of experience and they have a pipeline of reputed clients. So in this ERP system, they have modules like Ramco EAM, which is Enterprise Asset Management Module, Production Management Module, Ramco Finance Module, Supply Chain Module, and Project Management Module. So in this one, Enterprise Asset Management is used for managing critical assets like power plants, aircraft, even manufacturing plants, with the company having a lot of assets. So this module helps you to have functions like covering break fix, preventive, predictive, reliability functions, and inspection, lubrication, calibration, shutdown. All these functions can be achieved through this suite. This suite is actually sold as a single suite as well, given to many big manufacturers or power plants. Critically, companies having a lot of assets. So that's it. And next module is production module. It will help you to achieve functions like more from less, diversify into a new product line, develop new business models, turn around products quickly, etc. And finance module, as you know, it has capabilities like many financial functions like covering payables, receivables, fixed asset, general accounting, and costing. These functions covering finance module. In supply chain module, they would automate the wide spectrum of business process in supply chain. Then there is project management module. It will help you to help the company to have the knowledge, skill, tools, and techniques to require account the projects that is going on and manage the projects in order to exceed the stakeholder expectations. Previously, I have discussed about enterprise asset management system. This suite is already, almost sold as a single entity to other firms because this is a critical software in order to manage companies having large assets, just like companies having large power plants or cement manufacturing companies and so on. Then there is the second business division, which is Ramco Global Payroll and HR System. It has around 4 modules right now. It has core HR module, which will help the company to recruit, train, and have functions like competency maps, time management, multiple employment targets. All the things can be used. Core HR functions can be done by this core HR module. Then there is payroll module, which is used to have the payroll for the employees working under the company. Then there is time and attendance module. Normally, the employers use the punch cards or thumb identification for time and attendance module, but they have already almost generated another source like innovative technology like facial recognition, GPS, and so on. Then there is due to COVID-19 pandemic situation, they have included pandemic control system module in order to regulate safe distancing and contract testing tools inside this HR management system. Then there is Ramco Global Payroll Software. It exists on-premise and on cloud. So this software can be deployed anywhere in the world in order to process the payroll functions. The last business division is Ramco Aviation and Defense Management Systems, which can be used for to manage civilian aircraft companies or military aircrafts. So in these software suites, there are many other sub suites like MRO software suite, which is mainly for maintenance, repair, overhaul of the aircrafts. Then there is maintenance and engineering software suite, which is to address end-to-end aviation requirements of various fleets, uh, for the maintenance and engineering purpose, which actually supports MRS suite itself. Then there is defense asset management software suite. You know that whenever you have a lot of fleets and you want to deploy for a critical mission, it needs a very quick response. So defense asset management software suite actually helps you to do a very fast action in order to do a function. Then there is flight operation software suite. This is a one-stop solution for helping to do flight operations, and a lot of professionals like pilots, schedulers, dispatchers, and billing executives use this software in order to manage day-to-day activities of flight operation. Then there is fleet technical management software suite, which is whenever the company has a lot of fleets, just like a company like Emirates or Air India. So they have a lot of they have a lot of flights. So in order to manage all the flights for their airworthiness and aftermarket service operation throughout their fleet cycle, this software, Ramco Fleet Technical Management Suite, helps for the company. This is comparatively newer software suite. Previously, it was part of ERP system itself. So this is a powerful logistic software suite which will help you to manage transport for third-party logistic, freight forwarders, courier express, and parcel service providers. It includes other functions like warehouse management system, fleet management system, hub management system, and finance and billing functions. So let's see their recent client acquisition. The Aden Container Terminal has partnered with Ramco for digital transformation. Aden is one of the largest port in Yemen. Upgrades to next generation enterprise suite, and Houston headquartered vertical flight solution, which is Bristow Group Incorporated, selects Ramco Aviation for their maintenance and engineering functions. Then company has signed 2 partnership deals worth 50 million with cloud-based HCM software giants like Oracle and Workday. Company also signed a deal with Panasonic Group of companies to transform payroll operation across Japan, China, Philippines, and Malaysia. Company plans to implement logistic software at Saudi Arabia as established logistic service provider. Company also want to serve Caverton Helicopters Limited with its aviation suite. There has been agreements signed with a classic fashion apparel industry company, the largest apparel manufacturer in Middle East, to deploy Ramco Global Payroll software. So let's see geographical ways how the revenue comes for Ramco Systems. Company derives 43% of total revenue from Asia Pacific market, out of which Indian revenue has increased to 25% from 20% in financial year 2019, and in American revenue has actually decreased to 18% compared with financial year 2019. But at the same time, Middle East and African markets actually increased their revenue to 14% from 11% in it has decreased to 11% when compared to 14% in financial year 2019. And in Europe, it actually increased their revenue to 3% compared with 2.6% in financial year 2019. Some interesting facts related to R&D and other launches. Uh, Related to R&D expenditure, companies spends around 15.6% of total revenue for R&D, which is very high, and related to 13% in 2019. That means that the company is trying to innovate a lot. So the major benefits that company achieved through this spending was zero UI, cognitive process automation. I don't want to go detail about these, but these are functions which will help the company to adapt to have more capabilities for their software products. Then ANA, that is called alert notification action. Then boards, you might be knowing artificial boards coming when you open a website. Then artificial intelligence and machine learning functions. Then about their new launches, they have previously explained they have developed a facial recognize based time attendance system called Ramco Geek. Then they have expanded their artificial intelligence and machine learning capabilities into Ramco Transportation Management, which is the logistics software, to have more functions in operational areas including booking, planning, and billing. They are also trying to make more advancement in their HRP system using modern technologies. Let's see the shareholding pattern. There is no share pledge. So if you look at the Ramco system, it was the subsidiary of Ramco Industries or Ramco Cements. Ramco Cements is one of the largest cement companies in South India. So both Ramco Industries and Ramco Cements holds around 17.8 and 17.64% in Ramco Systems. They have decreased their stake, but still it's considerably it's not that significant. Then Venkatrama Raja holds around 10.98. He has increased the stake. So yeah, I think he was the previous operational manager who might be very important in the company. And look at this one, Vijay Kedia, who was a superstar investor, who was an early investor into Ramco system, and he made big in Ramco system. So still he possesses around 1.1% in Ramco system. But one thing is not positive, it is here. Foreign institutional investors actually decreased their stake in the company from 10.55% to 1.43%, which is not good. And domestic institutional investors also decreased their stake from 12.38% to 8.58%, which is not at all good for the company. But look at the public shareholding has been going up, but from both of these, it's not ideal for the company. Let's see the financial evaluation. So in a single snapshot, it's a small cap company having a market capitalization of 1,925 crores. So it's a small cap company. Currently the market price is at 627 when it have a book value of 212 per share. So when you calculate the price to book value, it is 2.95. It's around 3 times the book value of the company. So the stock is slightly overvalued, and it has gone as high as 785. Look at the 52-week low. It was at 103 rupees. So it means that from 52-week low, it has actually grown 500 times. So those who have invested at that time would have been made 500 times return. So the stock PE, look at the stock PE at 34.5 when you compare with the industry PE of 32.5. So at the PE value also, the company's share is actually overvalued. Look at the ROCE, 15.7%. It's not that impressive. And ROE at 8.87%. Not at all impressive. But look at the face value at 10 rupee. So we can expect that future share splits that will benefit the retail investors. In the recent year, they made sales of 626 crores with an operating margin of 27.4%, and they made a profit after tax of 55.8 crores. Actually, that profit has been very high when you compare with Ramco's previous profit growth. I will tell you in next slides. Then previous quarter they made a sales of 150 crore with a PAT of 7.36 crores. So in 3 years they made a sales growth of 10%, which is not that impressive. But look at the profit growth. In 3 years they made a profit growth of 69.9%, which is very, very impressive. And this gives EPS of 18.2. They had a debt of 62.8 crores, which is not that high. So company can be easily said that a company with low debt, and debt to equity is also 0.10, which is actually very less. And return of assets at 5.91, which is not at all impressive. Let's see the financial return in detail. So when you see the revenue has been actually grown 6 times over the past 10 years. The revenue has been grown 6 times. So it was 168 crores in 2010. Right now it stands at 626 crores with a profit of 56 crores. But look at the profits. All the time the profits were very low. Even the profits were going, they were making losses, minus 40 crores, minus 24 crores and so on. So right now it stands at 56 crores, which is very impressive from the company's history. So that's why that might be the reason why the stock price is also advancing. Let's see the sales, profit and loss statement. So see the operating margin, 18%, 16%. It's going minus. Then slowly it's increasing, even though it is reduces in 2007 to 27%, which is very impressive. Depreciation, interest cost actually decreases over the year, which is actually good. And that's one of the reason company has actually reduced their debt enormously. And related to depreciation, see the depreciation has increased. That means that some technology of the company become obsolete. Mostly for technology companies, they don't have too much assets, so the write down will be on technology. And net profit, see net profit. And dividend payout, about the dividend payout, company doesn't pay out any dividends, so it's not good for people who look out for dividends. And this is compounded sales growth. Within 10 years, it made sales growth of 12%. 3 years only 10%, and 5 years 7%. Sales for the company as sales growth is concerned, it's not that impressive. Company is having very low growth in sales. But if you look at the profit growth, in 3 years they have 70% profit growth, 10 years 36% profit growth. Current months they had profit growth of 447%, very impressive. So if the company has been able to innovate and they can focus on more sales, company will be a turnaround story. And if you see the EBITDA margin always it has been near to 20%, but except in 2012, 2013, 2014 and 2017, all the EBITDA margin has been impressive. So right now it has EBITDA margin of 29.67, which is very impressive in 2021. Look at the ROA, ROE and ROC figure. All the time it has been going going in negative. So slowly it increased in 2015, 2016, and it has been flat for a while. So right now the ROE and ROCE, which is 6.55, and ROE also increasing. But the ROA has actually come down to 1.04, which is not that impressive. But still, when you compare with company's history, still the company is going for a turnaround, probably. Let's go to the risk factors. Company has a debt of 62.8 crores and cash in hand of near to 15 crores. So when you compare with the cash in hand and the debt, company is not having not that debt, and the rating is also very positive. It has a rating of ICRA A negative, positive reaffirmed rating for their long-term credit, and ICRA A2 plus for short-term, for the short-term loans they avail. Then when you compare with the interest coverage ratio, company had a past interest coverage ratio which is even going negative, which was not good. But if you look at the current trends, the company has been improving a lot on interest coverage. Currently it has an interest coverage ratio of 13.23, which is very high. You can't say very high, it's comparatively very high, especially when you compare with the history of the company. Then total debt to equity. So in 2014 and so on, it has increased to 3.39%, which means that company was in high debt. From that stage, company has managed to reduce the debt to 0.15. So very impressive in terms of company minimizing the debt related to liquidity. And if you see the business risks, Ramco Systems actually face intense competition from established players, especially in ERP, from SAP, Oracle, NetSuite and Plex Systems, etc. That's why they had a hard time getting more projects from developed markets in US and European Union. And they have high, because this is a software product company, they have a high investment in R&D, which might affect their bottom line. Then there is this is working capital intensive, because they have to too much working capital is required for because this is a software product company. So the debtor days even ranges to 90 to 100 days, which is not positive. So, but still the company has adequate capital right now, so don't have to worry about that. Then they have forex risk because it is an IT company. Forex risks were obvious. Let's go to the valuation figures of valuation about the Ramco Systems. Look at the book value related in relation with price to book value. So over years, company has actually managed to grow their book value. So from in 2014 and 2015, the book value has actually come down, but from 2015 onwards, book value has been going up from 103 to 212 per share. And the price to book value, look at it had a high price to book value in 2015 and 2016, but currently it stands around 2.92 actually. So that means that company's stock has been little bit expensive. So but when you compare with the other IT peers, still the company is not that expensive, I think. Let's see the strength and weakness of the company. So it has established ERP with 3 decades of experience. Growth in quarterly net profit with increase in profit margin year on year. Then company is with low debt, book value improving, zero promoter pledge. Then related to weakness, they had a decline in net profit with profit margin quarter-over-quarter. Then this is one of the company with a low Petrosky score, which means the median level of financial stability. Then there is declining net cash flow, which is not ideal for any company. Let's see the peer comparison. So in peer comparison, you can see that based upon P value, only Emphasis has less P value than Ramco Systems. See, all have big P value. See, Happiest Mind 107.75, very high. And Oracle Finance also have low P. See the Oracle Finance Service P 17.6. I'm seeing it. And in relation with IT service companies, this fee is actually curious. And no dividends, and profit has been very less this quarter, but the profit percentage has been 225, which means that company enormously developed profits in the quarter. And when you look at the ROC figures also not impressive. Only Persistent System has relatively higher Ramco. It has a low ROC compared with other PEs. Even at the debt front, there are companies with no debt, L&T Technology, Scoforge, and other companies has less debt. So when you compare with the peers, Ramco Systems are not that impressive, but Ramco Systems are one of the unique IT product company. When you compare with other companies, like you can't actually compare with L&T Technology and those companies which are IT service companies, which are more profitable and less working capital intensive. Let's see the price chart of Ramco Systems. And in 2015, I previously said that 2015 the price to book value was so high, it came as high as 105 rupees. Right now, it went as high as 704 in last 52 weeks. Right now it stands at around 626 rupees current market price. So I feels that company has a turnaround potential, but still the stock is at expensive value. So Let's see my insight. Let me give you my insight. Currently, the market price is at 626 rupees. It has a relative PE value of 34.5 when you compare with industry PE of 32.5. So it has a relatively high P when you compare with the industry, and PV value is also high at 2.95. So when you look at these factors, the stock is bullish from around 5,000 percentage growth from its 52 week low. So stock is right now the stock is at expensive valuation, but stock is at expensive valuation because company has enormous profit in last year. So that is one of the reasons why the stock is in bullish. So it's a good company. It has a 3 decades of experience in ERP system. It has established customer base, and company is also facing competition with investments in R&D. Oh, okay. Not companies. It's not facing competition. It's actually having problems with heavy investments in R&D. And because it is a software product company, if the company has failed to innovate and change respect to business environments, company will have the issues. And in product software companies, always the competition is very intense. So company has, but when you compare with the company history, company has showed enough turnaround capabilities, because through the slides I have shown that with an increase in profits recently. I still believe that the company is still cheap related to the other ITPs, but it can also has the potential to turn around. So the investors who can risk turnaround possibilities and bet on company's ability to innovate, which is very important for this company in order to survive in the years to come, can still buy this stock for long term. But for short term investors, I don't suggest that buying into this stock will eventually give you a gain for short term or swing traders. So the main risk for the company is from established players in ERP and small players emerging in SCM and logistics software. So that's it, guys. As a disclaimer, I am not a licensed portfolio manager. Have your decision in regards to investing, and give me feedbacks about the video. Thank you once again. Thanks.